Hello, in this video I'm going to talk about the different types of financial risk, otherwise known as banking risk. So there are various types of financial risk that banks and financial institutions face. We'll talk about these risks. The first one is the credit risk, and perhaps the most common form of risk that banks and financial institutions face. And what we mean by credit risk is that the risk of default, because banks lend money to clients, and if clients default, then bank will lose money, and that's something called credit risk. And then what is known as interest rate risk. Well, interest rate risk has to do with the movement in the interest and the fluctuation in the earnings by the financial institutions or banks due to movement in the interest rate is known as interest rate risk. And then what is the market risk? So market risk has to do with the trading assets. So banks and financial institutions are also engaged in the trading assets, and the trading assets, as you know, are marked to market. That means if there is a movement in the market, if there is a movement in the stock market, in the financial market, then the asset values could come down, right? And that's a market risk. Then we come to liquidity risk. So liquidity risk has to do with the scarcity of liquidity. That means bank doesn't have enough money and it's not able to raise money at a normal rate. It has to pay way more than the normal rate to raise capital. So that's the liquidity risk. Or it doesn't have enough money to sort of pay the money to its clients, or give away loan, or it doesn't have cash. That's in basically what's meant by liquidity risk. Then operational risk. Operational risk has to do with the loss that banks incur due to operational incidents, whether it could be systems, because of human error, and so on. In fact, the fraudulent activities that happen sometimes within banks also fall in the operational risk segment. Sometimes because of system issue. That means nowadays you have everything in a computer and server, and sometimes hackers hack into these systems and servers and steal money. So that's operational risk. Then FX risk, that means the foreign exchange risk. So foreign exchange, as you know, keep on fluctuating. That's why some instruments, financial institutions, heavily dependent on the foreign exchange, and if the values come down, then the bank loses money, and that's the foreign exchange risk. The last one is the country risk. So country risk has to do with the risk associated with a given country. If there is a crisis happening in a given country, that will pose the risk to the investment or the money that has gone into that country, and bank is at risk because of this crisis that's happening in a country, and that's called the country risk. So these are some of the major financial risks that banks face.